GM, just a quick one before we get going. So, as you know, the Blockmates podcast is for informational and entertainment purposes only. Certainly shouldn't be considered as financial advice. We have absolutely no idea what we're talking about half the time. So, any investment decision you do make should be based on your own research and your own understanding of the risks involved. One more thing as well, there's around 50% of people who listen regularly who aren't subscribed yet. So, if you please could just do us a favor and hit the subscribe or the follow button or the like button, helps content grow, helps us grow. Helps it reach more people like yourselves, and it means the world to us as well. So that's the last I'll ask of you. So yeah, let's get to the episode. All right, so we made a decent chunk of change in the last bull market, or even the cycle before that, particularly in the crypto space. There's a high chance that you give a lot more back than you definitely anticipated. It's a common problem. Everyone comes across the same kind of issues of, yeah, it's easy to make money because everything basically you can throw a dart at CoinGecko or CoinMarketCap, and the vast majority of stuff tends to go up. It's just liquidity coming into the system, and the same is also true when you see that kind of reflexive move to the downside, and I think that's what catches everyone offside. So there are also parts of the bull market that get euphoric and a little bit people don't think straight, and money gets thrown around, and the relative cost of goods, coins, market caps, the whole thing just goes ballistic. So you have to kind of keep yourself grounded a little bit and check some of your biases. And there's a whole host of things that you need to do. But I've been stewing over these for the past, well, what feels like a lifetime. It was past 2 years. Where'd they go right? Where'd they go wrong? And I thought this week I'd write them into a long form Twitter post, which you can see, which is pinned to the Blockmates profile. And I'm writing this as Grant, the founder of Blockmates, who, been through the ringer in the 2017 cycle. Didn't have a clue what I was doing, I'll be completely honest. And then stuck around to kind of dig myself out of the mess that I'd made and tried to just absorb as much information as possible and spend as much time in the markets as possible. And then as a result, the 2020, 2021 and early 2022 cycle was infinitely better. But there were still some mistakes made on the bull side, and there was still definitely some mistakes made on the way down as well. So what I wanted to do is just kind of go through these, and it's just holding myself accountable, but it's also to be used as a tool for anyone who's coming to the markets for the first time, or even came, like, whatever, just use it as a bit of a blueprint. There's definitely stuff that I've missed out. There's definitely stuff that I could add. Maybe I'll do a V2 when everything's going ballistic, even though we're starting to see the murmurs of something quite important, I think, in the markets now, hence why I'm doing this. So strap in, enjoy. Hope I don't waffle too much, and let us know in the comments if this is the kind of content that you like, and we'll do a lot more of it. So basically, I know this kind of goes without saying, but if when everything is moving, you want to be betting on the fastest and the fittest horse, and by that I mean you want to be picking positions that are outcompeting the market and definitely outcompeting Bitcoin and Ethereum. And if they're not, then you might as well just hold those two, and then that's it. Because you're going to waste a lot of time, you're going to waste a lot of money, you're going to waste a lot of sleep. If you can't outperform the market leaders, then just don't bother. Honestly, it's not worth the time and effort. Before I actually go any further, I'm just going to say, like, if you're not mature enough to take responsibility for your own actions in the market, then please just turn the video off now. I'm not going to be taking any responsibility for anything that gets said here as financial advice. It's certainly not financial advice. It's not life advice. It's just lessons that I've learned to myself that other people might take some inspiration from. So if we're all mature enough, we can go on for the rest of the episode. I think we are. So let's get to it. So, as I said, 2017, I came in a little bit later than first anticipated. I was still studying, and then I absolutely thought I'd crack the markets. Everything started going up for a couple of months, and then I got my ass handed to me and didn't know what the sell button was effectively, and got stuck holding the bag all the way down. Probably a little bit too much of the student finance money that you got given in the UK invested there. And as I say, I had to dig myself out. And the beauty of it was the information that I'd learned. I think, I'm not sure a lot of people know this, but I was actually supposed to go down the PhD route in cancer research. So I was heavily into kind of research scientist roles, and that was kind of where me in a parallel universe would have been. So I think that lent itself well to kind of really getting into the depth of research and really kind of being able to sit there and go through documents and write down your thoughts and what does this actually mean, and what does it mean from like a first principles level? Can you like strip it back to the point where it can't be explained any further down? And in doing that, Blockmates spawned off the back of that, because I just learned so much, and I was just hungry to not have what happened in 2017 happen to me again. this kind of budding, emerging media company was born out of the back of that. So it's funny how things work out. But as I said, the last cycle was an awful lot better, but I wasn't happy with some aspects of it. There was certainly some times, like thinking back and having a couple of years to stew on this now. There's just stupid mistakes, and sometimes you know what to do, but your emotions get the better of you, particularly when everything's just going crazy. And if it is your first time around this time and you think bull markets are a myth, then strap in. It should be a good ride. It's not for the faint of heart. It's absolutely brutal at times. When you see numbers that you've never thought were even possible just kind of get evaporated into thin air, whether that be from just pure market decisions, whether that be from smart contract risk, whether that be from shoddy teams, rug pulls, bad security, OPSEC, phishing links, whatever it is, it's not for the faint of heart. So again, just to reiterate, if you're not going to kind of spend the vast majority of your waking hours thinking about this and doing this, then Bitcoin and ETH are probably your best bet. Maybe Solana as well. I think Solana is probably going to have its. So last cycle, the Ethereum had its Bitcoin-like run. I think this cycle, Solana has its Ethereum-like run. And then there's probably going to be something that pulls the same multiples as Solana did last cycle. So that's kind of where my head's at with it. So Bitcoin, Ethereum, Solana, if you don't want to do this full time, I think. Because there's just no point. There's no point trying to kind of outcompete people who are doing this full time. They've got more capital, they've got more experience, they're going to be more dedicated, and then they're spending more time on the computer. So anyway, the lessons, I'll shut up. Again, none of this financial advice. Nothing will be a financial advice. I just want to protect myself a little bit there, because I think a lot of people, it's great when everything's going up and everyone's happy that they've made money, but on the way down, people are like want to blame people, and I'm trying to do this to help people. I'm not trying to do this to be blamed for people's own decisions. Like, you and only you're responsible for the money that you make and the money that you lose. So the first point I made is stay curious and try shit. So I think this actually applies to people who've been around the space a little bit longer. So it's quite a funny one. So I think when you first come into the space, you can be, well, from personal kind of experience, it was, let's just do as much shit as physically possible. Let's try and wrap my head around absolutely everything. Let's try shit. If I don't know it, then that's not good enough. Like, I just need to kind of try stuff out. So particularly when DeFi summer was happening, then there was an awful lot of stuff happening every single day. You got your lending and borrowing. There was an ever-changing kind of DEX landscape, AMMs, Uniswap, Sushi came online, farming, Yearn. Like, it was just, you needed to be just at the forefront and trying stuff and trying to be one of the first people that are, just inquisitive enough to go and try new things. Because what will happen, you will end up stumbling upon something that is absolutely brilliant. And just by pure curiosity, the rest of the market might not have woken up to it yet. So always just try and find, there's kind of a rule of three that I have. If you hear it from three different places, then you just got to go and try it. And maybe that's even a little bit too late, but you can kind of afford to be a little bit later in a bull market. In a bear market, then less so. So be curious, try stuff, and as the cycle tends to go on, more and more people get a little bit more clued up. So your edge in the market tends to kind of erode quite significantly as the cycle goes on. People get more money, they get increased kind of tooling, their skills go up, there's more participants in the market. So edge has to be derived by you reestablishing it by then trying new shit that other people, maybe it's bridging to a new ecosystem that people won't try out. Maybe it's like downloading a new wallet to access something that people won't try out. Maybe it's, there's a little bit of a barrier to entry to get over there, better barrier to entry to understand. Like, just try stuff out, because if you don't, other people will, and then they'll actually formulate an opinion on the product itself before the rest of the masses do. And if you're buying before the herd, particularly in a bull market, things can get really, really good indeed, particularly if you're smart with the exit as well. So again, just to reiterate that one, try shit, stay curious, and don't rest on your laurels when you think you know everything. It's like, it's a very bad situation to be in. You just kind of get complacent and other people won't. So this next one is, I think people can't wrap their head around it. So the next point is, don't chase yield, right? So what I mean by that is, unless you've got probably over $1 million, there's no point you chasing 20%. There just categorically isn't. There's better opportunity in the market. So if you're not playing with like a large purse like that, don't bother taking on additional smart contract risk, emissions risk. By that I mean, is the yield coming from a large amount of supply coming into the market that you're not aware of? There's going to be much larger people with more experience in the whole yield game, particularly in DeFi. And if you do have a small account and you're trying to grow it quickly, you do not want the opportunity cost of being sat in a farm or a lending and borrowing protocol. Particularly now, it's at the point where you're not actually earning yield, you're earning like points in the hope of an airdrop, because the way that kind of regulations going and stuff like that. I think there's kind of two ways that you can bring tokens to market, and one of them might be an airdrop. So you're probably going to see that a little bit more prevalent now. But yeah, the opportunity cost of just being sat in a yield farm is just stupid, right? So particularly if you've got a small bag, let's say you've got, I don't know, less than $1,000, less than $100, whatever it is, there's no point being sat in a position that's going to earn you 20% APR over the course of the year. You could quite easily catch a strong bid on there's certain days in the markets, even like your Bitcoins and Ethereums and Solanas are going to move probably 20%. I know that sounds ridiculous, but and all the while you're not waiting for the full year whilst everyone around you is rotating in and out of players. There's a new emerging trends coming onto the market, and what will happen as well if you do see a farm, one, APRs will dwindle as the more people come into it, and two, you'll probably get bored of it anyway and then just give up and then go and do something else anyway. But trust me, that's what will happen. So if you're not just readily set up, you've got your financial wealth, you're set for life, and still, I don't think I'd be chasing yield in DeFi anyway, if that was what I was looking for from a position. So don't chase yield if you've got a small position. Just focus on getting as much multiples on your portfolio as physically possible. And I know that sounds a lot easier than it is in practice, but people who've been around the bull market know. There are a few times that it might make a little bit of sense depending on the person. So if you, for example, are going to stick to the initial plan, whereas you're saying just hold Bitcoin, Ethereum, or Solana, maybe you want to hold a liquid staking token like Staked ETH, Rocketpool ETH, or Swell ETH, or I don't know, Frax ETH, where you're basically holding ETH, but it's a yield bearing asset that's earning stake and rewards. Maybe that's not for everyone. That's just another level of complexity. I do just truly think that you should try shit out, but it shouldn't be with a large portion of the positions that you're in. It should just be for like trying to figure out if this thing actually has something about it. When with the rest of your position, you can then probably purchase into the underlying token of said protocol. And maybe that's going to get you 20, 50, 100% over the course of a week or a month. And then if you just sat in some stable 20% farm or lend and borrow protocol, then it's going to be like, what am I doing here? You've got a select amount of time. There's a window of time where you have to make as much money as physically possible and then walk away until the next time around. So you don't want to be sat trying to earn 20% on a small position. Right, just gonna put that out there. So next point is let others drink the Kool-Aid. And by this I mean, and anyone knows first time around or last cycle, I was definitely caught sipping from the communal Ponzi Kool-Aid fountain a few times, and it's so easily done. And if you get too close to a community at times, like a project community, then you'll definitely find yourself leaning biased towards a lot of things that get said by others, and it can even cloud your judgment when it comes to selling. So like there was a load of projects last time, Popsicle Finance, not so much Abracadabra, Wonderland Time, because they had that kind of cult-like figure with Danny Sester there. It's just clouded a lot of people's judgment, and then at the end, all said and done, I think a lot of people kind of got hurt from that. And the same thing happened with Luna and UST and that whole fallout. Like these cult-like figures are great when everything's going great. And if you do see a community that puts their founder or founders on a pedestal like that, then if you can see through it, that doesn't mean you don't have to buy it. It just means just be aware of what's happening and buy into the momentum of it. That's what I kind of do personally, but make sure you get off the train before it eventually crashes. That's all I'm going to say. They do tend to pump the hardest. They do tend to have a good floor that is built on the kind of cult-like community that these kind of projects, and you'll know them as soon. It won't be hard to spot them, so keep an eye out for them. Usually when friends and family ask you about them, might be something there, but usually if friends and family coming into a first time around, it's probably buying into complete scams. But yeah, so let others drink the Kool-Aid, but you can definitely benefit from Ponzi cults in crypto, definitely. So position sizing is a funny one. I personally felt I was too small on the way up and too big on the way down. And by that, I mean, I think my positions probably had too many bags on the way up. So a diversified portfolio is not great, particularly in crypto. And then I probably had too concentrated of positions on the way down and then suffered the downside risk by concentrating. And technically, I don't think diversification in crypto is a good thing at all. I think it's silly. I don't think you should have more than, well, I know it's just an arbitrary number, but you should only have like a handful of bags. You shouldn't have anything more than that. And the reason for that is assets can move individually and they can have their day in the sun, particularly if Bitcoin is chilling out, which runs the market. and you will get baskets of assets that move all together. Some are going to move more than others on specific days, but you do tend to get ecosystem movements like LSD basket movements. You're probably going to get Eigenlayer, liquid restaking baskets moving together. AI will move together. Like they move together, but when the market pulls back, it all pulls back together. So it makes absolutely no sense to have a diversified portfolio, because what you're going to get, you're going to have fast horses. They're going to drag your portfolio up. You're going to have stuff that stays flat, and you're going to have stuff that just pulls back slightly on any given day. So that might be a good day, but when there's a bad day, everything pulls back together. So the diversification isn't doing you any favors on the way up, and it doesn't even play into your hand when everything pulls back anyway. So I think first time around, if you're going to go for it and you're going to have a lot of time at the laptop and you're going to have a lot of dedication, you technically want to be looking at your Bitcoin, Ethereum, and I'm daring to even say Solana in there at the minute, or for that matter, any ecosystem token like AVAX, Arbitrum, or Optimism or Base. Like obviously don't have a token maybe yet, and by that I mean, again, if your primary position is in any of these tokens like Bitcoin, ETH, or Solana or whatever, and you're not out competing those with the altcoin players that you're playing, then there's no point doing anything. Just sit on your hands. And I know that's boring, and it's a lot easier said than done. I'll be the first to admit. But if you're not out competing those, then there's no point. You're just putting waste. It's just a complete waste of time and waste of effort. But what you want to be doing skillfully, you want to be looking at like your alt pair charts. So your ETHs against Bitcoin, your Solana against Bitcoin, your whatever against Bitcoin. And if it's increasing, obviously that asset is outperforming Bitcoin, right? Then you want to have a look at your alt ETH charts. So Solana ETH, AVAX ETH, Arbitrum ETH. If it's increasing, then those altcoins are outperforming ETH. And then again for your Solana pairs maybe. But what you want to be doing is on the way up, you want to be trying to stack as much of the lower, I know this quote unquote lower volatile assets as physically possible. So you want to be trying to outperform Bitcoin, Ethereum, Solana. And you do that by taking your primary position, cutting a chunk off. There's a play that is a higher beta play. By that, it means if Solana pumps 10%, this might pump 20. And then what you'll do is you'll take a small portion of that. Hopefully you're timing it right, you're playing the market well. That altcoin that you've rotated into, like a portion into, outperforms SOL, and then you can take a point back in time where you actually rotate it back into Solana. And then the initial position has grown in Solana, and then Solana has also continued to go up or sideways or down. But at the end, as the market is continuing to move up, you just want to be trying to compound as much of that base asset in the portfolio as physically possible. Now that might be ETH. What's funny is like what you'll see is you'll have, like, for example, if Arbitrum's running, you may get ETH, and you might get ARB that runs, and then you'll have a load of ecosystem players around it that might be coming into a good kind of catalysts themselves. So you might want to rotate out of ARB into like GMX, for example, rotate that back, and hopefully you've got a large position of ARB, and then ARB continues to move up. So that's how you can kind of compound in. Takes a lot of time and effort and skill, and you will get your ass handed to you a lot of the times, and then you might end up with less than you actually started. So again, if you're not confident in this, separate a position out and then try it a couple of times until you kind of get the hang of it and the swing of it. Just trading against that majority owned asset in your portfolio, and then just try to just compound that main position. If it's not working, again, just sit in your majors. There's no point trying to overcomplicate things if you don't need to. Shitcoins are generally good is the next point, and I know that's kind of a bit of an irresponsible statement, but just like hear me out what I'm trying to say, right? In my opinion, if you've got a reasonably small bag, you certainly don't want to be on Ethereum. You want to be trying to find cheaper alternative chains like Arbitrum, Optimism, Solana. I don't know, Base will come online early in the next year properly. I know it's live now, but I think properly. And you want to be looking at higher risk players. And again, if you can't take that in a responsible way, just stop listening. What I'm trying to say is you do have an awfully large chance of just absolutely losing everything if you're playing in the shitcoin markets. There's people who do this all day, every day. They have more money, they have more information, they have more connections. And to be quite frankly honest, it's completely rigged. There are often times where you will turn like a ridiculous profit, and that's just purely down to luck. You've got to understand that there are positions you can take in the larger markets that come down to more of a statistical calculation, and you're trying to put the odds in your favor. With shitcoins and lower market cap positions, you're verging, well, you're 100% gambling. I was going to say you're verging into kind of gambling territory, but that's exactly what it is. If something does pull off, it's purely down to luck, and really understand and accept that, and it's not down to any form of skill whatsoever. If you think you've got an edge, you don't. I'm just trying to be as brutal as possible, because you're going to go broke trading shitcoins all the time. The idea is if you can have an extremely small portion of any portfolio constantly on the look, trying to gain some form of edge in the market, with regards to this, you might be able to get a great return on that. That then allows you to go and move up the kind of chain of command into your kind of lower to mid caps, and then trying to just rotate that into like a more stable portfolio where you're looking at your Bitcoin, ETH, and Solana as your kind of mainstays of that portfolio. But please understand, you are going to lose all your money if you're fucking around in these markets if you don't know what you're doing. As I say, you might stumble upon something and get really lucky. If that happens, don't try and do it again and again and again and again. Just use the same playbook of stuff that you can afford to lose, stuff that you're happy to lose, and then trying to rotate it into this kind of stabler core position of your majors. Always going to be volatility, and if you can't stomach that, these are definitely not the markets for you. So if you don't get it, buy it. So this is like a real painful one for me. So when you see something, particularly in these markets, and we've mentioned cults, there's a lot of kind of dogmatic thinking around, people thinking they're right all the time, and there's a lot of kind of vested interests, whether that be financially, whether it's that because their friends runs the project. Like there's always a vested interest of why someone's talking about something, whether you care to admit it or not. If you have like an allergic reaction to something, like you don't like Bored Apes, or you like think XRP is stupid, or I don't know what it is. Maybe it's something new, and you're just a bit like, that's just fucking stupid. That doesn't make any sense. Like, why would anyone want to even buy that? It sounds stupid. Maybe it's like a new ridiculous Ponzi, like, I don't know, Uber on the blockchain, and it's just like, what even is that? That just sounds like ridiculous. 9 times out of 10, those things tend to move a lot. So my kind of personal anecdote was Steppen last year did some serious numbers, and the kind of pitch is move to earn. And I was just like, what are we doing here? Move to earn. And it just kind of gave me that visceral kind of, this is just a complete Ponzi reaction. Like, why would anyone buy this? But a lot of people did buy that, because the masses who, when they all flock together and move markets and just market buy shit left, right, and center, and it cuts through to people's fucking aunties and uncles and cousins and brothers and sisters and all that shit. Those things can move markets an awful lot, and they did. Steppen was one of the players. I met someone who had a ridiculous portion in the Steppen seed round, and they're just completely set for life, like probably 5 lives over. And if that was me, if I'd been offered Steppen seed round, I'd been like, I mean, do I really want to put something into a move to earn Strava kind of competitor? It doesn't make any sense. But again, it's not just this example of move to earn. It's not just an example of stuff that you think is a Ponzi. If you have like an emotional reaction to it, just go and check it out, because there might be something there. And even if you really, really hate it, it's probably goodbye. I think we're totally emotional beings, and your negative reaction might be someone else's extremely positive reaction. And if you can get enough people who have that same positive reaction in the same room together and they start buying stuff, then stuff moves. So yeah, if you don't get it, buy it is that point. The next point is just write, or in a similar kind of vein, just create or publish, or even just get down information that you want to understand, because writing, in my opinion, is the quickest growth hack to anything. You will think you know something, and then when you go to write it down, you actually check if you do actually understand it. And it's a good way to actually really understand a subject, a project, anything. And that can, one, if you come into the market for the first time, or you joined a little bit later and you think your knowledge needs to be scrubbed up, just write. Even if you're not going to publish it, I'd suggest you do, because you can build your own brand, and you kind of, there's a million different writing opportunities in the industry. I would just write down the thoughts, write down the thesis, get pushback from it, like check your bias on it, and I think you'll be a better trader for it. You'll be a better investor. You'll understand the space more. And it's just such a simple thing. Anyone can do it. The next point is stay healthy. I got fat as fuck during the last bull market. You've got more money. You're spending more time sitting at the desk. There isn't a financial incentive to go to the gym. But if I did, my head would have been a lot clearer, and I think I'd have performed better. And impulsive decisions probably would have been tamed a little bit, because I'd have been a little bit more zen after going to the gym and trying to kill myself at the gym. So yes, just stay healthy. Do yourself a favor. Fat cells don't go anywhere. They just shrink as you lose weight, and they can just put them back on. So don't do that. Don't do what I did. You can't own everything is the next point, which is, again, similar to the first point of, there's so much going on, there's so much going up. You're in group chats with your friends, and they're owning stuff, and they're all printing money, and you want to kind of own something, but then that's just going to diversify the position. So have conviction. That leans into right. The point of right. You're going to have much greater conviction on stuff that you truly understand and less conviction on stuff that you truly understand as well, because you might see through it for what it is. But yeah, you can't own everything. Over diversification is terrible, particularly in this market when it's so reflexive and coordinated together. Personally, just stick to what you like. Try, and I know it's really difficult because the algorithm on Twitter is so ridiculously good, but just try and have your own opinion on stuff. If you've tried it and you think you know personally, and there's nothing that's getting in the way of your thesis, just do that. Don't chase shiny stuff, or if you want to chase shiny stuff, keep a really small portion of your portfolio for doing that, because you will end up over diversified, and the time will come. What tends to happen as well is when you are over rotating and you're trying to own everything because stuff's moving out of the blue, that tends to be at the frothier end of maybe an intracycle top or a part of the cycle where you're going to get that pullback. So, and when it does pull back and you've got 40 different bags and 20 of them are on Ethereum and it's $500 to transact and sell them, you don't want to be stuck doing that. So again, just be aware. Yeah, the next point is just break your bags. So if you can't tell me the bear case for the token that you're holding, then you shouldn't be holding it. If you can't find a bear case, then you're probably joined one of those cults that I was talking about earlier. So have a bear case, then you'll know when to cut the position. If the bear case comes true, then get yourself out. So supply dynamics are everything. This is the next point. So tokenization is such a weird, wonderful thing at the same time, where you're gonna have like ridiculous unlocks of tokens, and you're gonna have emission schedules, like how many tokens come onto the market every day, at what point in the year or the year after is there a large unlock, and those tokens have to go somewhere. And if you can figure out using websites like token unlocks when those token unlocks are, and what the inflation schedule is, and who's actually going to be receiving the unlock, like is it early stage investors, is it the community, is it an airdrop, like are these people likely to sell that? And the vast majority of the time the answer is yes. So please understand that, because you will get stuck holding the bag. And if you think people saying hodl or hold, just hold your position, hold, there are some tokens in the next cycle that will not reach their previous all-time highs. And that's because the inflation of the token supply there's been that much coming at the market. It would take something drastic to get them above all-time highs in token price. It might reach market cap all-time highs, but even if it does, that doesn't necessarily mean that the price of the underlying token will be at all-time highs. And if you're stood holding it while people are just selling into you, then pretty silly. So make sure you understand that before buying into anything. The phrase of just one more 2x, or if you start getting a calculator out and working out how much you're earning a day, or if you start looking at your dream villa, or you start looking at Bentleys and shit like that, at that moment, or the main one, telling your partner how much money you've got. Just sell absolutely everything you've got at that point. Sell it all, because if you're doing it, someone else is doing it, and they're going to secure the bag and you're not. And then what will happen is you'll feel that you were deserved to have that liquid cash at all-time highs, even though it was on paper and it was paper gains. And then you'll feel guiltier and guiltier every time that you want to sell, as your bag converges to zero. I've seen it. Don't do it. It's brutal. If you have been a good market participant and you've been accumulating or dollar cost averaging over the bear market, when you've been getting the likes of Solana at $8 or sub $20, don't then go and sell out on the first 2x, because it might be a 100x, right? So you don't want to have stuck out the last 2 years of hell to then go and sell larger institutions your bags at 2x your entry price. If you stuck it out, just sit in your hands, put it out the way. Don't even think about touching it, unless you're skillful enough to be able to rotate into ecosystem players that have a higher beta and then earn more and compound on the position. But if you're not, you might end up giving a portion of that bear market entry back. So I think that's it. There's definitely a lot more. And if I do remember, or if I get a brain fart and I feel like I need to do another one, then I might do that. But if you do like this kind of stuff, let us know. I'm not going to create it if people aren't interested in it. It was just a repurpose of the tweet that got a lot of traction. So yeah, let us know in the comments. If you like, please subscribe, please leave us a comment, please like. I'm shit at asking for this kind of stuff, so please do it. It'll make me really happy. All the free newsletters below. Join Discord if you want. That's free as well. We don't want anything from you. Blockmates Buffet, a daily bulletin in Telegram is also below. We've got a billion other things that were going on, but we'll make sure you know of you, and follow us on Twitter as well. So right, thanks for listening. Hope that was useful, and yeah, see you next time.